Hello everyone, I'm Mark Sain and welcome to Sain Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 11 of the Forex market review. Today we're going to take a look at three charts just to see how they're occurring and what's happening with them and what wave cycles they may be, starting from the higher time frame and working our way back lower. So in this week 11 Forex market review, as discussed last week, we're not going to be talking about the daily FX news anymore, but please visit our website at www.saininvestmentsolutions.com and you can look at the Twitter feed on the main page where we'll be sending out all the alerts when it comes to daily FX news for the day. And also you can visit solutions_SIS, which is our actual Twitter site, and you can register there and get the feeds direct to your phone, and that way you won't miss out on any of the announcements that come out. So let's go ahead and look at the charts. So here we are. We're going to start on the Aussie USD on a weekly time frame. So we're going to start on a higher time frame just to see what wave cycle we may be in and where it might go. And at the moment we can see this large AO down the bottom coming back to the zero line. So when we see that large AO, we automatically take the assumption that we're probably in a wave 3 cycle. So if that's the wave 3 down there, we look left and we can generally see our 1 and 2 waves, but they're not always that clear. So don't be disappointed if you can't really see wave 1 and 2, but in this case they're quite clear. We have the pullback down for 1, pullback for 2, and then down for 3. So in our wave 2 pullback, we want to see a pullback of about 61.8%. It's done that and it's now made its move lower. Wave 2 technically doesn't end unless it breaks the high of wave 1, so it hasn't broken that high and it's broken the lows and made new lows, so therefore it does. That's 1 and that's definitely 2. So as our move down for 3, we're now looking for our pullback for wave 4. So once we draw in the wave 4 on our pullback now, so what we do is once it's come back to zero line, we then look left for the lowest point, and this will show us the end of wave 3. Now, the end of wave 3 down is the lowest point. Obviously, it's the opposite if you're doing a wave cycle in the up direction. So we use our Fibonacci retracement tool. We go from the recent highs to the recent lows. And for a wave 4, we like to see it pull back to the 50% area. But it's still a wave 4 trade as long as it doesn't enter into wave 1 territory. So as we can see, all of this is wave 1 territory. So if the trade was to pull back and close up in this area here, then that wouldn't be a wave 4 and that trade would then be terminated. So as long as it doesn't pull back much above the 61.8, then we'll still be classed as a wave 4. So in a wave 4 cycle, what we like to see is a pullback up, a pullback down, and then another push back up higher. So the first push up is wave A, we have a pullback for wave B and up for wave C. So if we believe this is wave 4 pullback, and we're going to look at selling the Aussie USD on a weekly time frame around the 50% fib mark, then what we want to do is drop down to the daily chart just to see where we may be. So at the moment we can see this possibly is a wave A going higher. Where it stopped? Well, that's the question. We go back to the weekly chart, zoom out, and we just go ahead and look left, and we can go ahead and drop in our horizontal line. So roughly, as you're looking left, you can see where it's bounced a few times. Roughly around these areas, it is likely to stop. So on the 4-hour chart, we've had our move higher. We see this large AO, so it's very likely you've got 1, 2, 3, back for 4, and it's going to go up for 5. So it's very likely it could have one more move higher before the wave 4 pullback ends. So we've got to just take the assumption that this is A and it's still got a little bit higher could go, and then ready for pullback for B, and then our next move higher for C. So we don't want to really look at this trade lower until it gets up to these levels here, but if you do take a trade lower, be cautious that it could bounce around this support area and then move back higher. We're going to take a look now at the euro pound on the weekly chart. As we can quickly see, we see this large AO, so that's we're going to assume is wave 3. So we go ahead, grab our Fibonacci retracement tool, put it from the high to the low, and all of this is wave 3. Again, we know this is the lower 3 because we wait for the AO to come back to the 0 line. We then look left, and because in the downtrend we look for the lowest point, and we class that as the end of 3 or the start of wave 4. So I'm just going to drop in a wave 4 icon there, go up here and drop in a wave 3 start. Looking left, we can see 1 down for 1, back for 2. So we'll go ahead and drop those in just so you can see roughly what I'm seeing. 1 and 2. And as we talked, this pullback for 2 can come anywhere in this wave 1 territory, but if it breaks the wave 1 high, then we cancel it. And as you can see, it's pulled back, it hasn't broken the high, and then it's broken 2 new lows, so that definitely counts for a wave 2. So down for 1, up for 2, down for 3. So now we're looking for the pullback high for wave 4. It has hit the 50% Fibonacci retracement. If we zoom out, grab a horizontal tool, it's very likely it could find resistance anywhere roughly where it is now to around the 61.8 Fibonacci retracement level. So taking that on board, if wave 4 pulls back, it can pull all the way back as long as it doesn't pull back into wave 1 territory, and wave 1 is all the way up here. So as long as it doesn't pull back all the way up into these levels here, then it's still classed as a wave 4. So I'd be looking at this, dropping down to the daily time frame. We said that was A, possibly be back for B, up for C. But you can see on this daily time frame that we possibly have a wave 3 going higher. So just be cautious that if you do take the trade higher, that it may find some resistance around that 61.8 level. So let me just go ahead, remove this fib tool on the weekly chart, and we'll go draw a Fibonacci retracement tool on the daily time frame. So all of this is wave 3. It hasn't come back to the 0 line just yet. It almost has, but hasn't come back just yet. So we want to see probably an A, up for B, down for C. So if we can see one more move back lower, personally I would like to see it around the 50% mark. You might set yourself a 200 pip stop loss and get out around up here. So try to risk 1 to make 1 for 2 for the highs. I wouldn't personally like to see it go higher because I think it could be finding resistance, but it very well could go just that little bit higher, form divergence on the daily time frame, and then start making its weekly wave 5 lower. So keep that in mind if you're trading it higher, where it could stop. And that's why we like to look at the higher and lower time frames. We want to make sure that the wave cycles match up on each of the charts. When we're trading at wave 5 lower and we start seeing 1, 2, down for 3, then we can really play all the wave cycles together. On the 4-hour chart, we have divergence. So as you can see, we have the higher high in price. So higher high in price with a lower AO, clear divergence coming back below the line. So therefore, that indicated that the trend up is likely to reverse, and it has, and it's making its way lower. So if we can see that one more move lower, maybe see some divergence, then it possibly could have that push higher. On the weekly chart, it looks like we have divergence as well. Just started, it's still really early to tell at the moment, but we do have some divergence, so we could be making that wave lower very soon. Drop down to the 15-minute chart. Yeah, possibly could make that little bit move higher, and then it's pull back lower. So at this stage, we're still quite unsure where it could go, but if it does pull back to these areas and you want to take the trade higher, just be very cautious on how high it might go, and it may not break the highs before it making its weekly wave 5 back lower to new lows, all the way down to the bottoms here, and even further would be my prediction. The final chart we'll look at is the pound yen on the weekly chart. Again, if we look at the large AO back to zero line, we look at that being wave 3. We grab our Fibonacci retracement tool, we draw it up to here. So that would be wave 3, because that's where it's broken the zero line. We look left, that's the highest point. Back for 4 and up for 5. However, you know, history shows I don't believe that's correct. I think it's going to come back and push its way higher. So I'm going to class all of this as being wave 3, and we're pulling back for wave 4 now. Wave 4 has hit the 50% retracement level. So if we zoom out a little bit, grab our horizontal tool, look left, it's roughly around these levels here. It's going to find some support, and it could come back a bit lower. So again, between the 50 and the 61.8 is where we could see it bouncing. So on the weekly chart, if this is wave 3, we've got our A, B, C cycle back for wave 4. We really want to take the move back higher for wave 5. So wave 5 going back higher. This is the pullback for wave 4 as we've just seen. And all of this was wave 3 going higher. So the numbers I'm drawing is always at the start of the wave cycle. Some people like to put the numbers at the end of the wave cycle. I prefer to put them at the start of the wave cycle. But as you can see, we have wave 1 roughly around here, pull back up, wave 2 pull back, wave 2 can't break the low as wave 1, which it hasn't, and it's made its wave 3 higher, ABC cycle back lower, and now looking at weekly higher. The daily chart is showing again possibly 1, 2, 3, so just be cautious if you're going to take the trade. Just remember the waves aren't in sync at the moment, so therefore we must be getting to some type of peak. Here's wave 3 on the daily chart. Still hasn't come back to zero line, so it's very likely we've got our A, we could come back for B, and we could make one more move higher for C before it makes another move lower. And if we drop down to the 4-hour chart, we can see some divergence. So it's very likely that when we did see that, we saw a higher high in price with a lower AO, and that's why we're starting to see these lows. And it could come back down and then it push back higher. 15-minute chart is showing a large AO, so again we could be seeing that pullback and another move lower. That's why we want to go down to all the time frames just to see where we're seeing divergence and where we think it might go. So everything at the moment is looking that it might come back a little bit lower before it pushes back higher. If you did want to take a trade around these levels, you'd be risking around 800 pips to make 1600, so a bit risking 1 to make 2, but I wouldn't be pushing it too far past the lows, because as we can see, it's possibly wave 5 push higher, so it may not break these lows. So thank you for that. That was week 11 of the Forex market review. If you feel that I've gone a bit too fast through those, please pause the video, rewind it and watch it again, and you'll definitely understand it very, very quickly. So I wish you all the best in your success. Take care. Bye-bye.